Hey there, thank you so much for tuning into our podcast. But before I take you to your show, I have a very small request to make. Do check out the other episodes that we have created so far. And as you know, we are available on all major music and podcast streaming apps across the world. So, whichever podcasting platform you're listening to, do hit the follow button and leave us a rating, as that will help us improve our content and reach a wider audience. And with that, welcome to the show. Well, early in the morning here in Mexico, the temperature is 7 degrees approx. There's no sunlight yet. And a cup of tea in my hands, ladies and gentlemen. In India, it's all festivals around the corner, lights, crackers, sweets. In Australia, we are having a very important India versus Pakistan match, which is going to have to be tomorrow. In UK, there's no prime minister. Okay, that was not necessary. And amidst all of these things, these super important events around the world, we are here with our podcast with all honesty, and we can't help. We have to do it. So, Priya, welcome to the show. As always, my co-host
Hello.
from India, super enthusiastic. She has trekked several ranges of Sayadri and Himalayas by now, I think, and really energetic about the festive season. Would you
Hi.
like to wish the festivals to our audience, Priya?
First of all, very happy Dhanteras KG to you and to every listener out there. So, yeah, I'm back in town, and it was such a huge journey to cover because we had to change buses and all, me and my sister.
Yeah,
Let's see, uh, our parents were very happy to see us back alive.
damn,
Really looking
that's a
forward for,
news.
yeah,
Yeah.
the
Okay.
snacks. Hmm.
Since it's Dhanteras and Diwali, one thing we all, since our childhood, we have um, seen it or heard it that people talk about finance when it comes to Dhanteras or Diwali. There's the goddess Lakshmi that is, that is celebrated basically. So we have a very exceptional guest with us. Like, I've known him for quite some time now, and our finance expert. So, Vibhor bhai, just say hello to our audience and just talk about yourself now. It's your podcast. It's all yours.
Mhm.
Own it now.
Hi KG, hi Priyanka, hi everyone. Wishing you all a very happy Dhanteras and a very happy Diwali.
Great.
Also,
So
what better day to call Vibhor in our podcast? Dhanteras it is, and we know how much importance it holds when it comes to
Correct, correct.
buying anything or um, spending your investments here on this occasion. So let's just begin with our interesting questions and
Sure,
every thought we
sure.
have had. Yes.
yeah, before we like dig into the questions and the money part of it, Vibhor
Mhm.
bhai, would you like to just introduce yourself? What are you doing? Where are you from? And what has been your background? How come you got into a finance in the finance industry, and how
Yes.
has the journey been so far?
After graduation, I got into a IT industry and, I worked there for around 2.5 years. But I always wanted to get into finance, more, towards money because I believe I have always been, I have always been good with numbers and,
Yeah.
making money for myself and for others. It's an exciting career option that you can explore. So even when I was working with TCS, I was thinking or I was preparing for CAT and all those kind of exams so that I can, switch my career from IT to finance. And now I'm working as an assistant vice president in Anand Rathi Wealth Limited. We are a listed company. Last December we got listed, and we are the only pure play wealth management outfit in India. We are
Wow.
managing, all the rich people's money in India and abroad.
Mhm.
Uh, so that is my background.
So all the rich people, Priya, not me and you. All right.
I know.
There
Accepted.
we are. Fact check. Okay.
Yes.
So yeah, this is like really amazing to know that you switched your career from like computers and IT to straight to finance, because this is
Mhm.
something we all, like, in a way we want to know a lot about it, but the finance structure or the financial education in India, as per me, is only what we hear from others, only
Correct,
what
correct.
someone else is telling me, okay, this is what you should do with your money, and we do that. We don't have a self educatory model as of now, where
Correct.
finance is not taught in basic finance is not taught in school curriculums. I think till 11th 12th it's not taught, neither in the
Correct.
graduation colleges, which I think
Yeah,
should be a subject at least in one semester of the graduation,
correct.
because immediately after that people are getting into jobs. And nowadays, so earlier, in like our parents generation, or like way early in early 2000s, it wasn't that people coming out of the colleges got a lot of salary and immediately they had plans of investment in those things. I mean, I'm talking especially about the Indian scene. But nowadays they're getting a hefty amount of money, and people of that young age, if they don't know how to use it, it just might not be a very sustainable thing for them. So anyway, nowadays it has become more important, and I'll not do any more talking now because if I start, I won't stop. So yeah, Priya,
Mhm.
let's go straight with the
Yeah.
questions.
Now that you have uh, like prerequisitely everything you have explained, how much it is important to start investing in our 20s, like early 20s, when we just start earning whatever the amount is. So my question is, Vibhor, when a person just started earning, and what are the basics one should know about investment? Like now that most of us are millennials who are just ending towards the era. Gen Z are more
Mhm.
prepared than us, that is for sure. But yet we
Mhm.
wanted to know what are the basics one should know, and whenever we need to talk about the division of amounts, how
Mhm.
exactly should it be done, and how can the person be relied that okay, the source is reliable and I can put my money on. So
Right.
Correct.
Just to add to what Priya said, Vibho bhai, before you start answering,
Mhm.
is like for a newcomer, absolute newcomer who may be just a Gen Z or somebody who's in his 30s, how to start, how to um, understand what are the sources to read about it and learn to basically get started with the money and the investment
Okay.
things. Yeah, over to you.
Sure. Sure. So, Priyanka and KG, I believe, whenever we are thinking of doing any investments,
Hmm.
the first question that should come to our mind is, why are we doing this? What is the need of doing investments?
True.
So it totally depends on from person to person. If somebody is rich, he wants to pass on his legacy to his next generation. If somebody is if somebody is from middle class family, he wants to create wealth for his generation and also for his next generation. And similar to this, somebody would be having goal of his child's marriage, or retirement, vacation, so on and so
Yeah.
forth, or even the house purchase. So even as wealth managers, we do also the same thing. We try to understand the objective of the clients, and what is their risk profile, how much returns they are expecting, and based on all this, their inputs, we prepare a plan. We can prepare a strategy to achieve those kind of goals. So broadly, if you see all these investments, they are divided into only four asset class.
Okay.
These asset classes are what? First one is real estate. The second is equity.
Hmm.
Third is gold, and fourth is fixed income. In fixed income, we generally refer as fixed deposits, or corporate bond. These kind of things comes under debt asset class, which is fixed income asset class. You know,
Yeah.
and the newest category in this one, I would say the fifth asset class, which has come nowadays, is the cryptocurrency. No,
Correct.
I
Yeah.
won't. Yeah. So I won't be talking much about cryptos, because even for me it is a very complicated subject. I currently don't know the
Of
fundamentals which
course.
is
Of course. Yeah.
happening. So for me, there are only four asset classes: real estate, equity, gold, and debt. Right.
Right.
So If you, as you rightly mentioned, our previous generation was more towards, they have not seen much, and now people are getting hefty amounts of in their salaries.
Yeah.
So if you would have observed the generation older than us or our parents' generation, they generally suggest you to buy a property or put your savings into FDs or LICs policy, those kind of investment vehicles, right?
Right.
And mostly our generation is it's tending towards stocks or mutual funds, those kind of investments.
Right.
And I think after introduction of all these new tech companies like Zerodha, Grow, etc. There after the introduction of these, all these investments in stocks and mutual funds have increased only, they have not decreased, right? I
Yeah.
have seen both the generation, a lot of people don't have proper knowledge of these things, what, where
Exactly.
should we invest. Some
Exactly.
people make money for some 2 3 weeks, and then they start even suggesting people which stock to buy, where to invest, all those kind of tips and all, knowing that they have mastered or thinking that they have mastered the skill of technical charts, and uh,
Exactly.
one fine day, one fine day, all their money gets swept away because of this. Technical charts are not the only thing, I would say, that helps you making consistent returns in the market. This is one of
Right.
the parameter of predicting stock market through technical charts and all those kind of parameters, but this is not the whole factor,
Only.
or
Yeah.
it's
Yeah.
not the whole thing.
Yeah, right.
It is just
So,
one
Vibhor
thing.
bhai,
Yes,
before you like dig deep into this, like you mentioned four asset classes, okay? Like real
correct.
estate, equity, there's fixed income,
Gold.
and the
Gold.
Hmm.
gold.
Yes.
So, I would like talk about so real estate. Okay, it's the old traditional way, like our parents always used to invest or want to invest, suggested us to invest in real estate, and there our forefathers. It's coming from generations. Like real
Correct.
estate is the only source of
Yes.
investment.
Mhm.
Now people are, like you mentioned, are more interested in investing in stock markets and mutual funds and other things. Would you like? Okay, so for our listeners who are very new to investment, so equity is basically the stock market. Okay, it
Mhm.
can, so there are different ways to invest in equity, right?
Correct.
And there, I mean, with every investment, there's risk that is involved. So I would like you to talk like for a very basic layman person, for a newbie in this. How can we um, like divide our money, and how can we start with, like, what would you suggest to start off with? I mean, real estate cannot be the very first investment, right?
Correct.
It
Yes.
needs a huge amount of money. So where to start with, basically?
Yes. So, before getting into specific strategy, or, where you should put your money, real estate, gold, and, equity or fixed income, the
Yeah,
first or the foremost rule of investing is to grow your money more than the inflation that you are subjected to. Correct?
true,
Hmm.
true.
The inflation or the CPI inflation number in India currently, right? If you belong to a
Hmm.
middle class family and you're thinking to upgrade your lifestyle from middle class to maybe upper middle class, right? Then the products that you are consuming, or the things that you are consuming would be different from the 80% of the people, right? So you are paying 2 3% extra to consume those kind of products, because their inflation, those basket of goods have a higher inflation than the CPI inflation. So
Okay,
if the government inflation number is 7% and you want to upgrade your lifestyle, so you're paying 2 3% extra over it, right? So the
correct.
inflation number for you would be 10%, 7 plus 3, 10%,
Approx,
right?
yeah, yeah,
Yeah.
right.
So now the thing is, this is the benchmark, or this is the threshold for you, right? To keep or to grow more than the inflation.
Yeah,
Now we'll see, what are the investments, how can we derive to a particular strategy, where should we start with? Now
that
to
we
go
beat
with,
the inflation.
correct, the first and the foremost objective is to beat the inflation, right?
Yes,
To beat the
yes,
inflation, you can keep an objective of maybe 12 13%, right?
right.
Now
Of
to
course.
achieve to 12%, you can opt from any of these four asset classes that I just mentioned,
Mm-hmm.
right? So let's suppose if that 12% objective and you are a low risk person, right? I can suggest you with a 30 to 70 kind of ratio, 30% equity and 70% into FDs, because these are the, you don't need to put whole your money in. You can start with SIPs, systematic investment plans, those kind of things, where
Yeah.
you don't need to put lump sum money directly, right? So
Okay.
30-70, if your risk profile is around maybe low risk person, then 30-70, or a medium risk person to 50-50. And if you're a high risk person, you can go with 80-20 as well, right? So a lot of, you must have read about it, or even as wealth manager, we suggest that, don't put all your eggs in one basket. A
Yeah.
platter of different products belonging to these four different asset classes would be something that you can opt for to achieve whatever your inflation is. Your inflation, let's suppose it is 10%. This Your inflation would be different, for you, and this inflation number would be different for Priyanka. It is different for
Right.
me. So the
Yeah.
first
Yeah.
step for you, right? If I compute my inflation number, the planning I have to do is to grow then more than 10% or better than the inflation number. Then I have to
Sure. Yeah.
come down to which product should I choose. Is real estate a good investment vehicle to get me 12% return? The answer would be no, because the hardly the rental yield is 1.5% in India, and you cannot expect more than 4 to 5% capital appreciation. So those kind of things you have to see. How can you get to 12 to 13% kind of consistent return with lesser risk portfolio?
Right. Right. That's the very first goal.
Yes. Then everything boils down to the second step. Which strategy should you choose? Along with it, as I mentioned, 30-70, 50-50, 80-20. Along with it, there are n number of things like leveraging, using derivatives in your portfolio to increase the return on investments, hedging to protect downside of your portfolio. So those kind of things can be, these kind of things, can be the second step. The first step is to compute the inflation number for yourself.
Sure. Yeah. I mean that. Yeah, that makes sense because I what I researched so far, and with my investment, it's all like uh, nobody has told me what to do and what not to do. Neither have I seeked help for this. But what I
Mhm.
have understood is like exactly your point. The inflation every year the government releases, it becomes 7%. And for individuals, it may vary from 7 to 12, 7 to 11%.
12%. Yes.
So for me to beat inflation, I have to get more money out of what I'm saving. So if I put it in a savings account or an FD, I'll get 3 to
Mhm.
5%. So I'm
Correct.
still 5% behind the market.
Yes.
So I have
Yes.
to start investing in a way. In some, or I
Correct.
have to put my money somewhere where I get at least 12% or 13%, so that I'm at least in line with the inflation, or I'm beating it by a percent or two. I'm not
Correct.
depreciating my money. So yeah, this is
The
like
Yeah.
yeah. Go ahead, Vibhor.
Yeah, as I mentioned, the platter of those products should give you a weighted average return of 12 to 13%. Some products will give you 5-6%, some products will give you 15-16%. But the overall portfolio for
Yes,
you should give you 12 to 13%.
understood. Understood. Yeah, that completely like makes sense. And like okay, so we have understood the investment strategies. It mostly depends on your risk profile. Like if you are a high risk taker, you can go for like 80-20 or 70-30. If you are an average, you can go 50-50. Or so I understand this. I mean, it completely depends on the individual, and we cannot just suggest somebody right here on the podcast.
Yes.
Because a person before the podcast texted me. He wanted to understand like how much should he invest out of his monthly income. So again, that's a very
Mhm.
individual question.
Correct.
It
Correct.
completely depends on what your needs are and what your expenses are on a monthly
Correct.
basis, and how you can save out of it. And then out of the savings that you're doing, what's your risk profile? How much are you opting
Correct.
to risk it?
Yes. What is their
All right.
goal and those things? How much they have the time duration to achieve those kind of objectives should be the question that we should ask them, or they should ask themselves. So based on those things, we should evaluate a strategy for themselves.
Exactly. Um, okay. Again, this is again a very layman question. According to you, according to a wealth manager, you're of course managing a lot of wealthy people in and around the country. Some of them might be CXOs of their respective firms and big businesses. Uh, what is the best investment strategy that
Mm-hmm.
you would suggest? What is the best investment for a person? So we understand that our goal is to beat inflation, the very first goal.
Correct.
Okay.
Correct.
How can we like start in a way where we are not only beating the inflation, but we are also developing a sustainable model of investment which can run on a longer term? Like, um, I'll give you a very vague example. Like, a friend of mine was at one time saving 20,000 rupees a month, and out of 20,000, he was investing in mutual funds 15,000. So he wasn't left with enough money at the end of the month because of the investments. I don't know if that's a right approach or a wrong approach, but how, according to you, as a wealth manager, how would you suggest basically to strategize this on a longer term?
So, as a thumb rule, what I don't think this, one size fits all, works in finance. But
Yeah.
for me, what I am doing for myself is I ensure that around 25% of my monthly towards investment would go towards all these monthly expenses, but 25% should go towards my savings or investments.
Okay.
I have made for myself. These thumb rules totally depend on the kind of expenses that you have, from person to person. Maybe somebody can save up to 50% for their investments. Maybe somebody can save only 5% of their monthly salary. So,
True.
thumb rule I have made for myself, it's 25%. It could vary from person to person.
Sure. Yeah. Okay.
Uh,
Um, yeah, Priya, go ahead.
Vibhor, all these terms, for example, uh, you said a naive, lump sum, all these terms, okay? When a person starts like dividing his money or her money to some investment like purposes, the terms which you're using, risk portfolio and all of these things, how he or she should be
Mhm.
prepared with this. I mean, I have seen people questioning, where do you invest, first of all, and then how do you decide which one is better? This is second. But then they come to very basic thing, how, what is exactly equity, what is exactly risk, how to calculate risk portfolio, because they are earning, for example, more than
Mhm.
30K per month, and they now are living with their parents. I'm talking about the era where we were in pandemic.
Mhm.
So
Yes.
at
Yes.
that time also they got to know that people are investing in some other fields, and they know these terms, how to gather this information. You should be prepared with such things, because all of these terms sound like, for those naive people who hated mathematics, it's like that. So
Mhm.
it's just
Yes.
how we should be prepared with these terms. It all sounds very good, but we actually don't know what these mean. So
Yeah.
when you said
Okay.
risk portfolio, when you said you can have your own inflation, depending on inflation rate, you can divide these things. Very basic, if you can tell that
Yes.
as
Sure.
inflation is arriving. So just let us know, the one who's listening to this particular podcast, what should
Okay.
he be aware of?
So I'll first start with the inflation, right? So inflation is, let's suppose if I'm going for I'm planning to go to Dubai, right? And
Hmm.
going to Dubai and being in Dubai costing me 100 rupees, let's suppose in this year, right? If I am deferring my visit to Dubai for the next year, then it might cost me 110, because of flight charges, hotel charges would definitely increase next year, right?
Mm-hmm.
So maybe visiting Dubai this year would cost me 100 rupees. Maybe next year it would cost me 110 rupees, right? So
Yes.
if my money, if I have saved 100 rupees for Dubai visit, if it does not reaches to 110 next year, then
Mm.
I am better off visiting Dubai this year, right? Not
Right.
to deferring my option to next year. Then the
Mm.
first thing or the first option or the first thing that I should keep in mind is that my 100 rupees saving should reach minimum to minimum 110 rupees next year, so that whatever I was planning, I should remain, or I should be going Dubai next year. It should reach minimum 110 rupees. So that is the inflation for you. Whatever you are consuming today, it will, it will keep growing on a certain percentage rate for the next year.
Correct.
The prices of those goods will appreciate for the next year.
Okay.
Currently in India, if the inflation is 7%, you are going to buy a 1 kg of sugar cost you 100 rupees. The next year it will cost you 107, right? So
Mm.
this is the inflation. So when you calculate your inflation, maybe to all those goods which you consume for for a particular month, then that particular basket of goods, how much it would cost you next month or how much it would cost you next year. If you just compare between these two, what is the cost previous year and what is the cost for this year, it will give you what is the inflation for you.
Right.
Am I
Yes,
clear?
you are. Yes, you are
Yeah.
very. Yes.
And this, in a way, also the government tells on an average that the country has had an inflation of this much percentage. Is it something like that?
Yeah, yeah. RBI publishes this inflation figure every month, every bi-monthly. They publishes this. So recently, in last days back or 4 days back, the number came was 7.4% in India.
Okay. Okay.
So
Understood.
suppose if you are, last year would have become this year. So that was the meaning of that 7.4%.
Mhm. Totally get it. Yeah. So, Priya, what was the other thing that
I just
you
I was taking notes before this, so I just thought of asking you. Moving on to another very much talked about question, which people desire of having a house of their own, but there
Hmm.
still is a dilemma: should we buy or should we rent? So, what is your take on this?
Yeah, exactly. Because
Uh,
I'll just add to the this question what Priya has asked. A lot of people in our generation, first, let's say in our friend circle, our group, they're not very sure of buying a house, even if they're making that much money. Okay, they
mhm.
might just wanted to invest in stock markets, in FDs, or keep their money in savings account. They do, because they might not have an idea of investment in that case, but they're not really keen on buying a house. They're okay with renting it because they know that they're gonna have a job is which needs mobility, which they might have to move or shift from one place to another. So buying a house at a particular city will might kill the opportunities. All of these questions come into mind. So what would you suggest? What's the finance think tank across the country is thinking about right now
So,
about this
in
particular
my
thing?
personal opinion, rent a house for sure. But there are many people who think that buying a house is the last goal that they want to tick off
Yeah.
the list, and that is absolutely their choice. But when I why I feel renting a house is better option is because rental yield is all hardly 1.5 to 2%. What I mean by rental yield is, let's suppose I am paying 25,000 per month for the house that I am staying in. This
Okay.
particular house, the market value of this house is around 1.5 cr, 1.5 cr, right?
Okay.
So 20 month. So on for the whole year, I would be paying 3 lakhs, right? 25,000 into
Yeah.
12
Mm.
would be 3
Correct.
lakhs. So 3 lakhs divided by 1.5 crores would be hardly 2%, correct?
Yeah.
Yes.
So 2% is the rental yield that I am paying to live in this kind of, right?
Yeah.
But if I just go and thinking of buying this house, I would be paying around, I would be taking a loan of around 8.5%, right? And the EMI come to me was around, suppose it would come at around 1 lakh rupees a month. So
Yeah,
1 lakh rupees a month I am paying for the next 20 years, right?
got it.
And here I am just give a, taking this house on a 2% rental yield. So rest of the money, let's suppose if I'm just comparing both this option one and option two, I'm paying a rent of 25K and investing in a particular equity or equity scheme or direct. We will boil down to what are these options. Let's suppose I'm
Yeah,
investing 75 in equities that can fetch me 15% per annum return, right? And the
right,
first or and the second option with me is to pay 1 lakh rupees as a EMI to buy that house, right? After I would be having this house, this particular house of 1.5 crores will, because of, there are so many fundamental changes that is going on this real estate sector. You have seen, GST has come,
yeah,
demonetization, RERA, Benami Property Act. So earlier, what used to happen, there were three kind of investors in real estate. One who used to park black money, the second one who used to consume that real estate or who wants to stay in that real estate,
right.
and the
Yeah,
third one who wants to invest in that real estate for rental income. So earlier, these were the only three people who used to invest in real estate, correct?
yeah,
Now, after all these fundamental changes, the things that I've mentioned, demonetization, GST, all those things. Now, what they have done is they have, taken out two investors from these three. Now, people are not parking black money because of so many, increase in the regulations. Now, people are not investing in real estate from rental income because the rental income itself is hardly 1.5 to 2%, right?
right,
So rental income and to park black money is not the motivation anymore. The only motivation for people is if they are going to stay in that property.
Correct.
So,
Mm.
for all people who wants to go and want to,
Stay.
pay in the money, they can
Mm.
choose a particular house. But all those people who, who wants to, explore in or experiment in their career, they don't know what in which city they are going to settle in. For all those guys, I don't think, buying an estate would be a better option. Renting a real estate would be better option for all these.
right. I mean, totally makes sense from your explanation because very rightly mentioned that earlier buying a property, maybe a land or a house, was basically restricted to three kind of people: the black money imposters, or someone who's actually willing to live, and someone who's doing it for a rental basis. So I mean, this could be something totally from one particular sector, because um, a lot of people I know, a lot of from our ancestors, they used to buy a property in the hope that maybe in few years this area is going to get developed and we're going to sell it at a double price or something. So they thought that the return that they are going to yield from, um, you can say, a real estate is going to be extremely more than what you might get from stock and equity or those kind of investments. So would you like to talk a little bit about the return aspect of real
Correct.
estate and what's happening around that?
Yes. So, I have seen a lot of investors, who had invested in real estate and they are very happy about their investments. I'll just wanted to ask them that first calculate everything. I mean, English or Hindi can be, it should not be the right language to talk in. Mathematics should be the right language to talk in. So
Sure.
if they are, just calculate how much return for these years they have made in terms of CAGR, compounded annual growth rate. Let's suppose I have invested 1 lakh of rupees in 2000, right?
Mm-hmm.
And now after 22 years, it has become 10 lakhs or 15 lakhs, right? So there is a particular CAGR return that you can compute out of this investment. If it is more than 20-25%, then you can say that uh the investment that you have done was right. Because whenever we invest, okay, I'll maybe I'm much. Whenever we invest, we have three options to, or we are, three sub decisions that we are taking whenever we take any
Mm-hmm.
particular decision. Let's suppose you have 1 CRKG, right?
Mm-hmm.
Now you have the option to invest that 1 CR. Where would you invest?
So for me, I would like straight away put 50% of it in stocks and mutual funds, straight up,
Mm. Yeah,
and with
Okay.
without having
rest
a thought, just.
without having a thought. So
Mm.
Correct.
this is how I'm programmed in my head. I may be completely wrong. You can educate me about that. But
Yes.
let's say if I get a lump sum amount of 1 CR, 1 crore Indian rupees, 50% of it, that is 50 lakhs, 500,000, 5 million Indian rupees would go straight to mutual funds and equity, stocks,
Okay.
direct
And
stocks.
rest
And
50%?
the rest 50%, let's say some amount of money I would use in self, like leisure, or uh, going on a vacation, buying things.
Mhm.
Let's say 10% of it or 20% of it could be used for that. Rest 30%, I would want to explore more investment options. Like nowadays, I mean, we won't go deep into it, but there's a new segment of investment that people are exploring is angel investing, investing
Correct.
into startups and seed companies, right?
Correct.
So, um, I would want to explore that also. It's not
Mhm.
that I want to be that person, but in case I have that amount of money, which I have nothing to do in general, of course, like few things we all, and I want you to talk about it maybe towards the end of the show, is we should always have enough money so that if that could cover our medical expenses and our family's medical expenses, in case of any emergency. So I would maybe
Mhm.
keep the rest of the 20, 25%, 30% money for those things, or would try to invest in something else. I mean, would like
Mhm.
to explore that area.
Sure.
Yeah.
So, when you mentioned that 50% of your 1 CR would straight go to mutual funds or equities or direct stocks,
Yeah.
you are saying you're taking, let's suppose your 1 CR, your 50% you are putting into mutual funds and direct equity, and rest angel investing or private equity, startup investments. Okay.
Correct.
Just keeping aside all your, leisure expenses aside, right? So, this is the decision that you took was equity as an asset class. You chose equity as an asset class, right?
Yeah.
That is the first sub decision that you took in your mind. You could
Right.
have chosen real estate, you could have chosen fixed income or
Mm.
gold, right? But you have chosen equity as an asset class out of these four asset class. So
Yeah.
that was the first sub decision that you took. The second sub decision that you took was whether I should put money into equity mutual funds, put into stocks, or put into private equity or startup investments. That was the second sub decision that you took. We call
Correct.
it as security selection, right?
Correct.
The first was asset allocation, the second was security selection. And now the third, whether you will put your money today, tomorrow, day after tomorrow, 6 months later, those kind of decisions, right? So whenever
True.
you are taking any decision, it is consists of three sub decisions, right?
Mm.
So
Got it.
we have seen, or three scientists in US, they did a research on this, that most of the long-term returns depends on the right asset allocation, not on the security selection. So
Correct.
if your asset allocation is right, then most of the returns comes from that decision only. Security selection will come later into the picture. It will not be the primary reason of your long-term returns. So I'll just elaborate what I just mentioned.
Sure.
So
Sure.
let's suppose KG and Priyanka, you have two options.
Mm.
KG, you are putting out of 1 CR. Let's suppose you are putting 80 lakhs into FDs, right?
Okay.
Or and 20 lakhs into real estate. Okay.
Mm-hmm.
And Priyanka, you are putting 80 lakhs into real estate and 20 lakhs into FDs, and you are sitting in
Mm.
2000, right?
Correct.
On the last, 10 years, let's suppose your real estate KG, where you have put 20 lakhs, it appreciated 5x times, right?
Mhm.
Your real estate has become 5x, whereas Priyanka's real estate has become only 3x times.
Mm.
After
Okay.
10 years, who would be richer?
Right. I'll be maybe richer.
No, you will
Maybe.
not be richer. Priyanka will be richer, because even after, his real estate is just multiplying by 3x times, because she has put more money towards
More
real
money.
estate.
Mm.
That is
Mhm.
why she's now,
Yeah.
right? So this was the second, even after your security selection was better than Priyanka, because your property is appreciated 5x times. Her property was
Mm.
appreciated 3x times only. Your security selection decision was better, but your asset allocation was not better than
Mm.
her.
Not
That
right.
is
Yeah.
why she is richer than you. So most of the long-term returns comes from right asset allocation, not from security
Selection.
selection. So all those decisions of private equity, equity mutual funds, direct stocks will be the second decision or the second priority that you should, prefer. And
Sure.
I have seen with a lot of bankers, or who are into this business, they talk mostly about, let's buy this stock. Okay, tomorrow this will give you 10% return. Those kind of decisions, but they
Yeah.
don't
Yeah.
talk about their current asset allocation. So if you just write down everything in your balance sheet, how much currently your balance sheet is. Let's suppose you have invested some money in mutual funds, some money in LICs, those kind of things. There would be a particular number for each and everyone balance sheet. For me, it
Mm-hmm.
would be, let's suppose, 50 lakhs. So now 50 lakhs is divided into this investment. Let's suppose 20 lakhs into FDs, 20 lakhs into mutual funds, 20 lakhs into FDs. Those kind
Right.
of distribution I have. Now this particular distribution would be have a particular growth rate. Like my direct equity is growing at 10% rate, right? 20% or 25% of the overall balance sheet is into direct stock. It is growing at 10% rate.
10%.
25% into mutual fund, it is growing at 14% rate. 20% into FDs, it is growing at 5% rate. So the weighted average of my return, right? If it is lesser than the inflation, and I'm talking about security selection in market timing, then it does not make sense, right? Because I'm
Right.
not even beating the inflation.
Right.
So as a matter of fact, the first thing we have to decide before getting into private equities, or these direct stocks or equity mutual funds, what is our current of my balance sheet. Then
So,
we'll
Sure.
talk about
Vib,
security selection, what is
okay.
private equity investment, those things.
Mm-hmm. Okay.
So
Yeah. Priya, you
Uh,
were saying.
I
Saying.
was just asking, what is the game behind asset allocation? For example, what is the current need? What is the basic we should know before dividing?
So this is basically for somebody who's not seeking help of a, let's say, a chartered
Professional,
accountant or a,
yes.
yeah, a
yeah,
professional
even for even
investor.
these are the things that one can everybody can do. You
Yeah.
just need to find what is the right asset allocation. As I mentioned, those are the four. These are the only four asset class. Real estate does not make sense
Mm.
for you or for the people who are in their 30s to invest in, because it will hardly fetch you 7 to 8% returns. For all these people, I believe we are in,
Yeah.
we are from
Mm.
middle class background. So for all of us, we are seeking at least double digit returns, 12, 13, 14, 15%, because
Correct.
we
True.
have to upgrade our lifestyles, right?
True.
Yes.
So to achieve double digit return, if real estate does not make sense, fixed income or FDs will fetch you only single digit return, 5 6%. And even gold, the we have seen gold, appreciation in gold prices. This is not because fundamentally gold is doing good. It is just because our currency is depreciating. So gold is also not making sense. Fixed income is not making sense. So the only option that we are left with is equities,
Right.
Mm.
right?
Correct.
So if
Right.
you are investing in equity, then we can explore what methods or what are the securities available under equity to go with. So people like us, maybe we can start with, for all the monthly salary that we are having, we can invest through SIP, systematic investment plans. Even for those who are saving in lakhs per month,
Mm-hmm.
Those, they can also think of, going with angel investing. But before, evaluating any product out of all these that I mentioned, direct equity, equity mutual funds, private equity, alternative investment funds, uh, all these products, you have to analyze on three parameters. What is the expected rate of return? Expected rate of return means what this product will fetch you in next 3 to 5 years.
Got it.
What is the risk associated with it? Risk associated with it does not means high risk, medium risk, or low risk. You have to calculate the standard deviation, right? We have,
Okay.
we all have studied standard deviation in our 7th to
Correct.
8th class, right?
Yes.
So you can measure risk in terms of standard deviation. So if the standard deviation is very high, that means that particular investment is high risk. If the standard deviation is between 7 to 10%, that means it's a medium risk kind of investment or asset. If the standard deviation is less than 5%, it is a low risk category. So then second and third is, what is the probability of making that kind of return, right?
Got it. Got it.
So let's suppose, I am a salesman. Let's suppose I am coming to you, your product, which will fetch you 15% return, right? But the probability of making return, which I am not telling you, of suppose the probability of making that particular return is only 30 to 40%, right?
Okay.
But a particular product is offering you 12%, but the probability of achieving that 12% is almost 80%. Which one you
Right.
prefer?
The one with 80%
Yes.
probability.
Correct. So whenever we are buying any product, because uh, in all our lives, different people will come to you, they will try to sell us n number of things. Only
True.
three questions we have to ask them: the rate of return, what is the probability, and what is the risk associated with it. If that particular guy is not answering you, is not answering these questions to you, then maybe you can switch to somebody else.
Sure. Yeah. Vibhor, that totally, makes sense. I have like a couple of more questions before we wrap this episode. Some very basic from layman terms from somebody who's just starting in their career. I'm not talking about veterans who are in their
Mm-hmm.
30s or 40s,
Mm-hmm.
but mostly about people who are just starting in their careers, like 20, 22 years old, 25 years. So let's say, uh, just what is the right time to start investing? So what the reason why I'm coming here is because sometimes you need to save some money, be secure financially, just in case you need some liquid amount tomorrow, right? You need to have some insurance. How would you like educate them in that sense, when to start investing? What is the right amount of money that you should have as a backup before going for like equity or those kind of investments?
I think the early start will better for you, because we all have studied the compounding interest formula, and in that
Hmm.
formula, T always comes in, you know in
Numerator. Yeah.
when T comes in exponential form, then that means that the more time that you are giving to your investments, it will pay off you, uh, you know even more. So for all those people who are thinking of creation of wealth, I would suggest that there are only two ways you can create your wealth, or you can accumulate your wealth. Either you can increase your salary or your active income, or the second is to increase your investments. You're
Right.
increasing your investments, maybe I won't suggest to go hard on yourself, and don't you know uh, spend much and start saving. I won't recommend this, but a certain percentage of whatever you are comfortable with, you should start investing, or you should start saving. Those and insurance is must. I totally believe that we are not educated, or we are not aware the society about insurance. But as you are living in Mexico, you must be aware that most of the people have insurances, right?
Right.
In US, the penetration of insurance is, more than 60-70% or
it's
90%.
it's I think more than mandatory, because the health
Yes,
infrastructure in most countries so developed that they say that
correct.
we cannot afford from our local, regular incomes, so they have to
Correct.
buy
They
insurances
have to
to
buy
avail those
insurance, and
services.
insurance will come hardly at 2-3% premium. 2-3% premium means uh, what are you paying to get the benefits? Let's suppose if the benefit is of 1 CR, you are paying hardly 1,000, 1,500 or 2,000 per
Exactly.
month. The premium is hardly anything, and uh, you know
The
uh,
benefits, it's a
the
lot. Yeah.
benefits are huge. You know, even if you are saving for your health, those kind of expenses, the time factor will started saving something in uh,
Hmm.
today itself, it's supposed, and after 1 year something comes to you, or something bad happens to you, your savings will not be enough, to give you those kind of benefits. But the insurance will definitely give you those kind of, 20-25 lakhs, whatever the sum you have
Exactly.
expect for yourself. So insurance is must for each one of us, be it health insurance, life insurance, and that too life insurance. Don't fall into the prey of ULIPs, unit linked insurance plans, or LIC's endowment plans. Go with term plans
Term life
and put
insurance.
your, yes, term insurances, term plans, and the rest of the money you can invest directly into equities.
Got it.
Because whenever because I know I am into from the same background of same industry where we use where we make these kind of products, all these insurance and all. I know, for investors it is not good, but from salesman point of view, they are
Right.
they will pitch you like anything.
I mean, yeah, that's how the business works mostly.
Correct.
Uh, one like the very last question and a follow-up question to um, what we just discussed about the savings plan, about wealth creation. So basically, let's say if there's a person with who's earning like 50,000 Indian rupees a month, and the income is very consistent, like you rightly mentioned, there are two ways: either to increase the investment or to increase the salary, increase the active income. Let's say if
Mm.
none of that is happening, okay, the market is very volatile. Market, when I say the job industry is very volatile, there's a recession around the corner, people are scared of their jobs, and but the pandemic just happened a couple of years back, where everything was nobody was like having a clue what's coming their way. How to be financially secured in those times,
Mhm.
the first question. And another question is, a lot of, like, you can say, with the this involvement of reels in our lives and shorts in our lives, the short mediums of social media, people,
Mhm.
uh, like, we have seen so many 30 seconds, 40 seconds clips of investor or people or influencers coming on screen and saying that, okay, if you are in your 30s and you haven't started investing, you're already late, my friend. I mean, I don't get it. Like, I can,
Mhm.
you are an investor, you can totally like slap me on this with all your knowledge, but let me put it this way. If I'm earning 25,000 rupees, most of India's average income would be 20-25,000 when they start off with. Okay. We are not
Correct.
talking
Correct.
about great IT companies or Google or Microsoft
Mhm.
or huge businesses paying them 50 lakhs an annum. But let's say on an average, engineering colleges or medical colleges student, when they start at 20-25,000 with internships, and eventually they grow. And if
Mhm.
out of, and that's the first time they are like tasting money, right? So, and
Correct.
then if some influencer comes and say, like, this is the right time to start investing, start putting whatever money you have in mutual funds or stocks or crypto or this and that, how is that person going to live life? If that person wants to travel to a place, wants to see things, wants to eat things, want to buy things for them,
Correct.
to those young people, to those young minds who have just started to earn money, just started to taste freedom of finance
Mhm.
in their lives, what would you suggest them? Like, how should they proceed in this thing? How and do you think that these influencers on Instagram or YouTube, what are they trying to sell is right or wrong? What's your opinion on this?
See, they are right in a way that, the more time that you give to the markets, they will perform
True.
better. But,
Hmm.
it's totally not right on on somebody's front that, they started their job and they're starting their earnings. And, the first thing that comes to your mind or comes on YouTube is that start saving those kind of, all those
Yeah,
advertisements that definitely you should, you should spend, and that is what I believe. If you're not investing, then if you're not spending, then the urge of earning more will not come. That is my philosophy. Uh, so I think I think don't worry about all those advertisement of saving, saving, saving. I think you should spend your money. You should live your life to the fullest, and whatever you can save, you can save. It
yeah,
as I mentioned, it totally depends. For someone, it is totally okay investing 5% or 20%, 15, 20% of their monthly salary. But don't go with that. My friend is saving 25%, so I should be also saving 25%. This is not the right logic to go with.
exactly.
So, and the question that you asked, that, since recession is around the corner, those things, then one
Yes,
should have around, 4 to 5 months of savings available to them, in case of, paying slip or those kind of things. If things are not working in your way, then this is a time period you should be having with you, so that you can find a new job, or you can think of,
figure out a
something
way
else.
basically.
Correct,
Yeah,
correct. I think 4 to 5 months of monthly expenditure should be invested into equity. Recession comes, all those your equity investments will also get hit. So that 3 4 months of expenses or monthly expenses should be lying in debt mutual funds or into your savings account, or into
okay,
even if FDs.
got it, got it. So just in case of emergency, you should be able to access that money
Correct,
like very
correct,
easily.
correct. Because if
Understood.
recession comes and you have your investments is into equities, that also will go down by 20 30%. That does not make sense. First you are sad about your job, and then you are seeing your portfolio is also down. So that does not make sense. So I think
Exactly.
your investment.
That's what happened for I mean a lot of people during the pandemic when they actually were investors, they were having a great life. Suddenly, out of
Yes,
some reason, a lot of big companies that we have heard, even right now, it's there in the news that Meta has or Microsoft has started to shortlist people that they want to lay off during the ongoing recession or the upcoming recession. So all of those people were earning good amount of money until yesterday. Their
correct,
portfolio, they were having a good portfolio of investment, a good savings account, and everything. Suddenly, the life changes, and see, money is directly related to your mind. If you're
correct,
not having good amount of money in your account, I hardly believe that you will be in a right state of mind to perform well in any other thing. Because
Mhm.
we see that financial independence is so much important before choosing an alternate career. if
Correct,
if today
correct,
I'm not happy with what I'm doing and I just want to start something of my own, I need money. It's
correct,
not the So people say money cannot buy you happiness, but of course it cannot buy you happiness, but it can buy you so many other things. And it's
correct,
exactly so important to be financially stable and secure, so that in case of crisis like a pandemic where things around you are not working well, you see your friends, your family, some extended relatives who are not doing well in life, or their career is just like gone in a way overnight. um how can you not be in that place? How can you be stable even after the forces being against you? So yeah, that's pretty much my side of
correct.
understanding. And Priya, you have something?
I mean, after listening to everything, and Vibhor, you won't believe my 2 pages of my register, which I took out, borrowed from my father actually. I said, I need a pen and I need a register from you. And he was like, of course. And I jotted some very important points, which I'm gonna apply. soon in my coming days. So two points which was really impactful, which I gathered from all the information that you imparted. That first, that it's never too late to start investing. It's never. For
Correct.
example, Bhaiya said that there are many misleading, also very good information which we gather from reels and short videos, that it's late, that you have not started your investment yet, just start, and the pressure is there. But the point is, it's never too late. Just start today. Second, have some boundary while spending your money. The taste of having financial security is real good. It's chaotic, but it's real good. So I'm gonna thank you, Vibhor, for giving us such good amount of time of yours, and
And
making our
not
day.
just that, we are on air, and we take this promise from you that you are going to come back, and we are going to talk a lot about. So we had to keep this short because of your time, of course, because we have the entire 24 hours doing nothing, me and Priya, but you must be having a lot of important work. So what I I wanted to talk more about, maybe we can have this in the next episode, is about the debt trap that credit cards create, the EMI
Okay.
options. Like you can buy a
Mhm.
helicopter for 500 rupees a month for next 10,000 years. And
Right.
I just don't believe how these schemes work. So we
Mhm.
can maybe talk about more picking up stocks, what to
Sure.
choose. And so we just take a promise from you that you're going to come back and
Sure, sure, sure. Definitely.
talk
We can
about
have a
these
different.
topics specifically. And any last parting words for our listeners, for the new investors, for people who have just started to earn money, the graduates, or someone who's in like middle of their career, like in their 30s, and now they want to actually go ahead and start investing? Any final thoughts for them? Final
You
piece of
know,
advice?
I, things that you have mentioned, that those advertisements have come. Even I used to see these kind of investments in my life, and I my investment journey has just started, 3 to 4 years back. So for the first, 7 to 8 years of my working, I have not saved anything. So it
Yeah.
would not be right from my end to give advices, go and start investing, because I have not done in my life. So I mean, whatever you can invest, just as Priyanka rightly mentioned, that just have some boundary around it, whatever expenses are, and keep investing a little bit of your monthly salary, so that you can develop a habit of investment. So and
True.
gradually you can increase your investments. And I just wanted to share these things, and a very happy Diwali to all your listeners.
Thank you so
Uh,
much, Vibhor.
Keep going, keep investing. That's what.
Exactly. And to all our listeners, we'll list all the handles that Vibhor has so that you can reach out to him in case you want to suggest, you want to like opt him for your personal financial um, handling. If you have that kind of money, of course, we can't. At least me can't. I'm not sure about Priya. Uh, but yeah, we will link all the ways you can contact Vibhor and seek personal help, personal guidance. Apart from that, enjoy your life, spend things on, like spend money on yourself, in your self grooming, in your um, studies, in your certifications, in increasing your capabilities so that you can have more of active income, and hence the investment would increase, right? You cannot just keep earning 10,000, 20,000, 25,000 a month for years and think of creating wealth, right? So increase your skill set, invest on yourself so that your skill sets are groomed. And we'll have experts like Vibhor back on our show to talk
Yeah.
more. Send us your questions and we'll try to address them in the next episode whenever we have it with Vibhor.
Yes, do send
And
questions, guys, because we really want Vibhor to come back to the show again, while we take the joy of having your queries with us. Any kind of feedback is appreciated.
sure. And the debt trap episode, Vibhor, it's pending on you because
Yes.
Definitely, definitely.
the youth and the people of our generation mostly, they're extensively using credit cards, and they're always in some kind of debt. The bills are not paid. So that is something we would talk in detail
Sure.
sometime, some other time. But yeah, thanks everybody for listening. Thank you,
Yeah.
Vibho, for coming on the show.
Thank you,
Thank you,
Vibhor.
KG.
Thank
Thank
you,
you,
guys.
Priyanka. Thank you, everyone.
Thank you,
Happy
everyone,
Diwali
and
to
a
all of
very
you.
happy Diwali and happy India Pakistan match for everybody who are cricket lovers around the world. So thank you
And
and
all the
signing
best
off.
to UK people.
Yeah, to find a new president who's from India or an Indian origin guy. But anyway,
Prime Minister. Yeah. Okay.
won't talk about it more until we have some news. Bye.
Bye,
And that
guys.
was Say That Again, Mate. See you all. Bye.
Hey there, thanks for listening to the podcast. Just in case you liked the episode, do leave us a rating and follow us on whatever podcasting platform you're listening to. It will be of great help if you share the podcast with your friends and tell them what podcast you're consuming. And you can also send us your questions, suggestions, feedbacks, and AMAs at pleasesaythatagainmate@gmail.com, or you can DM us on our Instagram. Our handles are there in the description of the show. And with that, I'll take your leave and see you again next week.